Hello and welcome to Crux Investor. We spoke earlier today to Clint Sharples, who's the CEO of Heritage Cannabis, listed in Canada. And if you want our thoughts and opinions on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and commentary from experts from around the world on a variety of commodities and companies. There's also some training videos on there. There are summaries of other interviews that we've done just to save you some time. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other. So why not go and join them now on cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description. Clint, how you doing, sir?
I'm doing very well. How are you?
Yeah, not bad. You're gonna reignite the flames of cannabis on the show and tell us what's going on. So thanks very much for joining us. So where are you today?
I am sitting in the middle of COVID-riddled Toronto in Ontario, Canada, trying to keep myself at a physical distance from just about everybody.
Yeah, good move. In fact, that's a good lesson even when there's no COVID. So we're gonna learn a little bit today about Heritage CANN, which is cannabis company. Now that's a kind of pretty big and broad topic. Why don't you kick off, give us a 1-minute overview of what your company is, and then I'll pick it up from there for me.
Yeah, absolutely. So if you take a look at Heritage, and we refer to ourselves as a vertically integrated cannabis company. And now, although true to some aspect, we're vertically integrated with the exception of growing. We feel that there's way too much cannabis supply on the market, and it's just as easy for us and probably much cheaper to go out and purchase a cannabis. We bring it in, we extract it, and we formulate products. Now, when you think about formulated products, it's everything from vape pens to tinctures to gummies, chocolates, beverages. Everything is on our plan for rollout. Currently, right now, we're doing vapes and the tincture bottles, and about to introduce gummies to the market here shortly. We're located we have 2 licensed producers here in Canada, one in the east, one in the west, and they're pretty much mirrored each other in facility and opportunity for expansion and shipping. What we've done now is we've added an additional medical component, particularly with focus in the United States, a company called OptiCann. They brought with us some bunch of executives from a former marijuana company or cannabis company called MedRelief, one of the largest in Canada that sold out 2 years ago. These guys went and started a new company. We've acquired them, and now we're targeting international and U.S. expansion through their business.
Okay, great. Before we kind of get into the technical side of things with regards to the products and the delivery mechanisms, etc., let me just try and understand your corporate structure, because you talk about having 5 operating subsidiaries, and you've also got partners, and you mentioned a couple of names there which I didn't actually recognize, OptiCann, etc. So just tell us about the structure and why you put it together like that.
Yeah, in true form, we probably have about 16 subs that the way that they operate, given that because you're outside Canada in different jurisdictions. What we've done is we're starting to simplify everything underneath the 2 LPs, 2 licensed producers that we have. So what we've done is we've collapsed our extraction company in underneath the LPs, and we have these 2 facilities are set up to do extraction-related products. We have then a U.S. subsidiary, a company that we acquired recently called OptiCann. They're based out of Colorado, with the target of introducing hemp-derived CBD products into the U.S. market. And as well, they'll be taking those same products internationally. We're already speaking with many different potential partners with the technology that OptiCann has and the products that they're bringing. It's in fairly high demand.
Okay, a lot of moving parts already, and we haven't really got into it. So what's your model here? I mean, is this reflective of the fact that it's quite a fragmented market in terms of, the lack of ability to sell interstate in the United States? the fact that you're dealing with Canada with different sets of regulatory components compared to the United States. I mean, why are you kind of piecing it together in the way that you have?
If you look at cannabis, there's really two major components to it. There's recreational, think of people who just want to go and use cannabis for fun, and then there's medical. So people who have a prescription and can go out and get medical cannabis. However, there are a lot of medical users who buy their medicine from the recreational market. It's easier. So what we've done is we've split our company into medical and into recreational, and we have the different focuses going on there. At the same time, our US business and our international business is 100% medical focused, as recreational use isn't legal in most places. So we focused heavily on our medical team, serving both Canada, which is a relatively easy market to service medically, to the United States, which, as you mentioned, you need to separate state by state, and then international, which is dealing with individual countries who all have different rules. So it's a little bit more complicated when you get outside of Canada. Not that Canada doesn't have its own complications. However, with our recreational business here in Canada, we're able to service quite a bit of that market too.
Right. Okay. Let's come on to international in a bit. I guess what I'm thinking about here is the fact that we've got a lot of different markets in the United States, which is the big market that everyone hoped back in 2016-17 would open up and change everyone's fortunes, is slowly adopting. I'm not quite sure how many states are open up to the adult recreational side and versus the medical yet, but it's not where everyone hoped it would be for sure. But there's costs to this. You're 66, 67 million Canadian market cap company, right? And you have been as high as 300 million, a couple of times. The beginning of 2018 and halfway through 2019. So, you've been up there. You've kind of been looking down at this market thinking, fantastic, now's the time. But as a $66, $67 million company today, it's harder because you've got cash constraints and you've got costs of trying to open up these markets. So how do you go about, I guess it's getting into business plan. How do you go about thinking about the best way to approach this, best bang for your buck, the most realistic positive outcomes are where to you?
So, yeah, you're right. The industry itself got so far ahead of itself. And we were no different from a lot of other cannabis companies that rode this big wave of taking your market cap to a massive and unrealistic trajectory. People were looking at the potential revenues that are out there and trying to consider what the cannabis company was capable of being able to do. And I've said this many times over and over to people, cannabis is a bricks and mortar company. It has facilities, it has HR department, it has employees, it has janitors, it has everything that comes along with a real company. And if you're not treating it and you're not controlling your costs like you do in every other real company, you're going to have a world of hurt. And it's a world of hurt that revenue can't solve for you. You can keep throwing more and more revenue at it, and if you're not producing margins to cover those massive overheads, you'll never have a company that'll be successful. Now, we've seen a lot of cannabis companies struggle under those cost constraints, and they're trying to correct it now. There's been massive write-offs. There was a big rush to trying to get as many plants under canopy that you can get, hundreds of thousands of square feet, millions of square feet being announced out there. But the question is, where's the market? And it was vastly overbuilt for the amount of the market that, not necessarily the market that exists, but the amount of the market that would come on legally. It wasn't going to be flip a switch and billions of dollars go from being in the illicit market to being in the legal market. It's been a slow build, and it is building, but it'll take some time.
But come back to your business plan. What are you going to? I get that, and that's very prudent. It's very conservative. It's and a fair representation of what went on before. Go on to the private jets. But for you now, given the size of your company and possibly the cash available to you, I mean, how much cash have you got?
On our balance sheet, we have about $7.5 or $8 million, depending on the time.
Right. So you've got to be careful about how you allocate that, where you portion that, and what your expectation of what it's going to do for you. So given all the moving parts you've got, I get the adult recreational bit, I get the medicinal component. You're in Canada, big market down south in the US, and you've got an international component. So it sounds great on paper, but you're gonna need to narrow in on what's going to give you the kind of returns on your investment now to keep things going.
Yeah, that's what this whole business is now becoming, and it is becoming a business that you need to be selling directly to the market. There's no such thing as, oh yeah, we sell to other cannabis companies and we make a fortune. No, it doesn't work that way. So you need to have products going to the end market. And you need to have products that people want to buy. Flower is still the strongest market here in Canada, although it's diminishing percentage-wise as the Canadian government is opening up more and more products. And if you look at the amount of flower that's available, there's a massive oversupply, massive. And there is a significant amount of biomass available to companies like ours to be able to purchase it, extract it, and turn it into various other products that people are starting to consume cannabis, such as vape pens, tinctures, soft gel caps, and gummies, cookies, chocolates, and ultimately, eventually, beverages as they gain more traction and move forward. This is where we're playing here in Canada. You're right, we don't have a massive amount of big war chest sitting there to be able to blow a whole bunch of capital on all these things all at once. Nor do I think even if you did have that much money, could you scale up efficiently and effectively? That's a tough thing, as I mentioned before. This is a real bricks and mortar company. You just don't scale up that massively that quickly. So you make some good decisions. You start creating some cash flow with products. We're doing that with vapes. We're doing it with tinctures. And we're starting to introduce it in the United States because of the various market sizes and customers that we want to go and be talking to down there. When, and it's not a matter of if, it's a matter of when legalization comes into the States. Albeit you are very correct, it's been slow.
It has been so. Okay, so you're going to focus on the adult recreational side. You talked about a couple of delivery mechanisms specifically in terms of edibles and tinctures, etc. And of course, there are multiple ways, multiple technologies out there, and people are coming up with them all the time to make it of the moment, shall we say. But you've got to partner with people to deliver those. You don't own those technologies or delivery mechanisms. So how do you make your money on the adult recreational side?
So the delivery mechanisms of vape pens, we make our own. We make our own tinctures. It's all of our own formulations, and they're all wildly popular. Have been in the illicit market prior to this, and then we brought it into the legal market, and it's had such a fantastic uptake.
You make vape pens, and you make surely you just fill these things up. You order the bits of hardware and you fill them.
Yeah, there's literally 100 different hardware suppliers out there. That's
right.
That's not hard to find. Sorry, we're not making the actual cartridges. No cannabis company does.
Right. Okay.
We all buy from the same, 5 or 10 versions of it out there. So we make the oil, and we have a proprietary process in which we make the oil. So we can offer what's called a full spectrum vape pen out there. Most vape pens take the biomass, bring it down to distillate, and then rebuild the oil in a lab to be able to fill a vape cartridge. We don't. We take the input biomass, and you take, and good news for us, there's a lot of high quality biomass available. We don't bring it down to distillate. We maintain and we preserve the strain profile that of the input biomass, and that comes out in the output of the oil. So the oil is an oil representation of the biomass strain going in. And we're the only ones in Canada doing this. And people who understand purity and quality are flocking to it.
Okay, and so again, it's just to help me understand the terminology around here, because again, there'll be a lot of new people looking
Sure.
at this. Okay, because Canada's a small market, whatever, 33 million people, not all of them vaping or consuming, and there are different levels of quality of product out there as well. How do you sell it? How do you package it? Because I imagine there's got to be a lot of money spent on the branding component, because it's not just a case of, it's flowers, is it?
So there are massive limitations to what a Canadian cannabis company is allowed to do when it comes to marketing, advertising. So branding really in Canada is, although it's important in to get some attention for people to look at, it's a really, really tough thing to explain to the world what differentiates your product from somebody else's, as you have virtually no ability to do this. It's a matter of people trying it and saying, hey, that's great, or trying it and saying that's crappy.
Wow. Okay. So do you have different quality levels, therefore? Different pricing structures? Again, if I'm a consumer and I'm, interacting with one of your products, why am I selecting your product versus the next guy?
Yeah, and that's a big challenge. So why would you? You're staring at it on a website, or you're looking at it through some glass at a dispensary, and you're saying, why would I choose a Pura Vida over someone else's product? So it comes down to, you need to be able to educate the people, particularly in the dispensaries. They call them bud tenders. So if you can go and have a conversation with them, and we go out and we visit all the dispensaries. We explain the difference between our products and what else you have for options out there in the market. And you need to make sure that these people clearly understand it, because there's huge turnover in this industry. Go in 1 month and then 6 weeks later, go in again. 6 weeks later, go in again.
Right. Okay. So when you said earlier you sell direct, what you meant was you sell to dispensaries. Are you able to sell online as well, directly?
Only medically.
Only medically. Okay, fine. Well, okay, understood. So what's your sort of typical margin on these units?
Depends which product you're looking at and what our pricing strategy is. It'll be somewhere in the high 20s to the low 40s on a percentage basis. We need to maintain about a 30 to 35% on average in order to kind of hit our targets as a business, to be able to survive, thrive, and show profit.
Okay, so it's 20 to 40 on a gross profit basis. Fine. Okay, and on the medical, does that improve any?
It does, yeah. You're not paying a lot of the fees that you would see from having to sell in Canada. You mostly have to sell to a provincial cannabis board that's government controlled, and then they get it to the dispensaries, and everybody takes their cut along the way. Whereas medical is direct, and you can carve some of that out. But there's other fees that come along with medical, and there's now the onus and the responsibility on patient care is on you. So you need to hire people to be able to answer questions. So when a patient has a question, they can call up and get somebody who's knowledgeable.
Right. And what was your revenue? So what's your revenue going to be this year, and what's it projected to be next year? And what are the margins that you're looking for the end of this year?
Yeah, it's a good question. We have a lot of things that we're working on right now that we feel are very close. So it's funny, you take a look at our budget, and there's about 5 renditions of it. If this happens, then this, and this happens, then this. If this happens, then this. And it's so when we look at our base case, it comes down to, what do we need to see? And we need to get ourselves to the $20 to $25 million mark in order to start cash flow break even. Not that that's a goal of ours. That's the absolute minimum you should be doing. So what we would like to do is get ourselves there fairly quickly as we introduce our products into the recreational market, and let that recreational market carry that number. After that, you can start adding into your medical, you can add into your US, you can add into your international, and for that matter, we also sell bulk oil a little bit to the Canadian industry. That can all of that should be margin that goes straight to your EBITDA line.
Right. Okay, I've got to come back to the beginning almost, is that in terms of these operating subs that you've got. What are the deals there? Because you've kind of pieced together a whole bunch of skill sets and formerly separate companies or former separate groups of individuals who've come under your umbrella. Is that, and they've now got a piece of the pie, as it were? I mean, how have you structured those in terms of remuneration?
Yeah, so we have brought together several different groups, it's all been based on, you have two choices to build. You can either build through acquisition, and you can build, greenfielding it yourself. Cannabis has been a business case and a colossal failure in greenfielding. When you take a look at the people who are involved, and anyone who's got substantial experience in cannabis has got it as being from the illicit market. There's no such thing as someone who has 20 years of experience in the legal market and bringing products to market. So you have to do a really good balance between your QA people who come from pharma and are very specific and are extreme rule followers, and then your people who came from the illicit market who are, at the very core of their being, not rule followers. And you have to put these people together in a way that makes sense. We've been very fortunate in the people that we've built who have their cannabis knowledge, the years and years of knowledge, in that they understood what they needed to do to transition over. And they've helped people like me who come from real bricks and mortars business. I don't know anything about cannabis when I started. They've helped me understand the necessities of being able to put forward a high quality product. At the same time, we've helped them put forward the necessities of making profit and following all the Health Canada regulations and all the stuff that comes along with that. Now, as you see gems out there, as you see people out there who have a certain ability that seems to be missing in the rest of the market, including our company, we're trying to bring them in. There's no road path of success in this business. There isn't anybody who can claim, hey, I went into this and I have a 10-year success history in legal cannabis. It doesn't exist. So all of us have been looking at the dark in front of us and trying to find a road that we know will be successful. And we watch, just some of them have been train wrecks as they go forward, head down, barreling forward, and then it turns into a disaster. Most of us are trying to avoid that.
Yeah. Well, if you're still around, you're halfway there. I think that it's interesting the way that cannabis companies in Canada are going to be able to move forward, because I think they're having to concentrate on Canada. You sound like you're going to have to concentrate on Canada to drive the revenues you need to kind of, one, break even, and then two, hopefully make some money. Are you going to need to get to market and raise some capital to be able to deliver your international aspirations? By international, I'm including the US as well as international further afield.
Yeah, so that's a conversation we have quite regularly internally. Right now, we're fine with what we're doing with addressing the Canadian market. It depends on the opportunities that come to us internationally. We are having some conversations right now that are significant, that are potentially game changers for our company. If they come to us, yeah, we have to bite off a little bit bigger part of what we were otherwise planning on doing. But the opportunity has to offset the cost. And, that's also a careful consideration. We're getting a lot better in understanding what truly is an opportunity and what can truly be something that is accretive to the company. And we've kicked out a lot of things. You mentioned that people are bringing a lot of technologies to cannabis. I get 5 or 6 a week brought to me. Oh, we have this, we have that. It's unique, it's different. In the end, it doesn't matter. It has to be something that is so absolutely required and needed and something inside the industry that it gets brought forward and is a changer.
No, I understand that. I mean, we too, the family office, get approached every week with some new delivery mechanism. They get excited about the delivery mechanism. I could care less about one delivery mechanism because I know next week there'll be another one. So it's fascinating because it's a fairly nascent industry, right? The most experienced public markets guy in Canada has probably been at it 3 years. right?
Right.
And I wouldn't invest in someone who's only got 3 years experience of an industry. You're talking to me about bricks and mortar business, and I'm saying those fundamentals. And I'm liking the phrase illicit market. I'm for adult recreational. I can only imagine. Where'd you find those guys?
You know what? They end up finding us. We have some good, strong cannabis people with great reputations from previous markets, and they're experienced in knowing kind of what's good, what's not good, and occasionally we run across these, like I call them, gems they're sitting there that, you know, it makes sense to us and it makes sense to them to come on board.
Okay. So if your market's Canada for now until something else comes along, great. It's kind of what you said to me. You said you want to focus on Canada.
No, it's our current revenue stream is Canadian based. We have people hired in the United States that are going full bore. We have people who are full-time dealing with international business. We have full intention, 2021, we're going to have revenues being driven out of the States and out of other countries.
Right. So how much does that cost you?
It costs you people. Really, it's. I'm not talking a staff of dozens here. It's a few people within the entire organization. So essentially, the burn rate of having some people working with other people in other countries that they already have connections with.
So you got a handful of sales guys in the States and elsewhere looking to find markets for you out there. How competitive is Canada? Because there's still some big names around, albeit in a much stripped down format. I mean, are you going to be able to meaningfully make any impact on the Canadian market?
Yes. Yeah. Well, we have absolute confidence in that. Canada is very competitive. Lots and lots of licensed producers out here. Health Canada keeps putting more and more out there. I don't know why. Growers out there are. There's only a select few who can make some money right now doing what they're doing. You need to be able to have the full gamut of everything that you have to offer to a purchaser. The Canadian cannabis marketplace grows month over month over month as we keep adding more and more dispensaries. That's the key. You can't have, Ontario last year had 38 dispensaries servicing 15.5 million people. That doesn't work. In that case, you have that many people, you need 2,000 dispensaries. It has to be convenient, it has to be close, or else people just won't do it. So Ontario's been able to build at a very rapid pace, and that's building the legal market, the addressable market, and we're picking up a good chunk of the percentage of the market in the areas that we're playing in, and we're going to start playing in other areas.
So what's the opportunity, the size of the opportunity you believe that you can capture in Canada?
In terms of revenue and what we're looking to introduce, is somewhere between $50 and $100 million. It kind of depends on how the market morphs. As you mentioned, 3 years of experience. Actually, it's just been 2 years of legal market runway that can tell us what's happened, and that's not indicative of what's going to happen. Too many different brands, too many different companies bringing too many different options, including us. We just started selling in June, and our products are in really high demand in the areas that they're in, selling out quickly. And that means they're buying ours and not buying somebody else's. And that's a real thing.
Let's come back to my earlier question. I said, why are they buying yours versus the next guys then? If you said it's so hard to differentiate.
And it is. So what you end up doing is you have people talking about you on social media. We happen to have 2 brands that were quite well known in the legacy market prior to legalization. We brought them and we created the legal brands, utilizing the same high-end quality, the same way that they've made these. So it was a reasonably well-known product already. And by putting that in the market and then really servicing it up, putting it out, social media saying, tell me what you think. Do you like it? Do you not like it? And we're getting great reviews. It's starting to get great uptake. And then going out and educating. Again, it's going out and talking to every single dispensary and explaining what the difference in our full spectrum process and our direct to vape process that we have that nobody else has out there. It's a unique product. It's not like I can take out an ad on TV and explain to everybody what's going on. Brands, there's no such thing as a known brand, a Coca-Cola or a Pepsi in cannabis right now. Everybody's fighting for brand recognition.
Okay, give me the timeline. 50 to 100 million revenues. That's significant compared to where you are today. So what are the things that are going to need to happen in the marketplace to allow you to do that if you do capture the percentage of the market that you think you do? And what's that mean in terms of your bottom line?
Yeah, so if you're looking 50 to 100 million, we're talking out into 2022 for that. And it'll be with putting out more SKUs, more products of what we're currently doing, plus adding gummies, chocolates, and likely at the tail end beverages to this. Now, in order to do that, the market needs to continue to grow. And for all intents and purposes, the estimate right now, it's about 50-50, the black market to legal. And legal is taking a bigger and bigger percentage of the black market month after month as more dispensaries are coming on board. We have hundreds and hundreds of dispensaries that have been approved and are in the process of being brought to market, making products available or more available to people who are currently in Canada. And we're going to be one of the cannabis companies filling that supply chain. 50 to 100 million, that's not a big number when you're talking about the potential Canadian market being north of 5 billion, and the product differentiation we have. So that's just a Canadian market for us until we start adding some of the US. Again, understand we're still looking 2 years down the road.
So 2022, you're going 50 million revenue is your guide. Okay.
Yes. Yeah.
Okay. And is that the point when where are you with the US stuff? Because we get a lot of people come on the show and go, I've got this distribution, these conversations, this thing. So today, have you got any contracts outside of Canada?
No. Well, no. So I'm gonna soft circle the no right now. We have a kickoff meeting happening down in the United States. Happened this week. I think they're coming back today and starting their 2-week quarantine. Where we have several different companies we're talking to about starting our distribution down there. We have some goals and expectations in the United States that, for next year are modest, but depending on the uptake that, in particular, the product, we have a product that has the VesiSorb technology, the absorption technology that is very well known. It's not like one of these ones that get brought out saying, hey, I've got this, and it's great. The VesiSorb technology has been around for years and years in the natural health products industry and is used by many big natural health product companies. We're now introducing it into cannabis, and the interest there is significant. And we anticipate we'll have a lot more to say of that very early into 2021.
And the same with international conversations. So no sales from international conversations either yet.
We expect we'll have a lot more to say of that before the end of this year.
Right. Okay. And what are your hopes for this space? Because it's been absolutely beaten up for the last 2-3 years. There were a lot of people lost a lot of money. Let me put it like that. Right. A lot of retail lost a lot of money at the height here. They've written that off. They'll never see that again. The companies have written it off. Do you expect to see a lot more regulation from the cannabis sector itself in terms of the way that they behave, from the Canadian government, from the exchange? I mean, how do people protect themselves?
As I mentioned before, cannabis got not just a little bit ahead of itself. It got absurdly ahead of itself, unlike anything I have seen since the tech run up in the late 90s, and then the subsequent bubble, no different from the cannabis bubble. Cannabis had 4 specific hard runs, the last of which was in spring of 2019, and it's been pretty much in the doldrums since then, and rightly so. The valuations were unsustainable. They were undefendable. All of them were. And some massive investments happened in the cannabis industry, into Canopy with Constellation or Altria into Kronos. And that seemed to justify some of the numbers that were being thrown around there because smart money was following it.
Smart money.
In the end, yeah.
Right. Okay.
Little tongue in cheek there. What that did was just it drew retail in. A lot of people who thought it was just you put money into a cannabis company, you wait for a week or two, and you can cash out 40% higher, and that was true for certain times. But you've been around investing long enough that that these things, if you can't back it up, you can't justify it, it will fall, and it'll fall hard. And it'll take a year to build, and it'll take a week to fall. And trying to catch a falling knife is a dangerous game. So people let it fall and let it fall and let it fall, quite often unjustifiably low. And there were some companies, and I'll say that we were one of them, that got unjustifiably punished. But in the end, if I'm sitting as an investor from the outside looking in, I'm saying, well, start performing and then I'll start investing. And I get that. I spent my life in private companies, and, to me, pomp and circumstance and hype mean nothing. It's all about make your revenue, make your profits, and start showing me why you deserve a higher valuation, why you deserve to be considered amongst the top of the top.
Yeah, it's interesting. I know a couple of brokerages, people there who are considered friends, who are pushing stock they knew wouldn't work. I mean, growing cannabis is like a fool's errand. I mean, there's a lot of previous in terms of, agricultural businesses would prove to you that the growing side, the margins fall and fall and fall, and that it was never going to be wise. And these brokerages were pushing stuff onto retail, knowing that it wasn't going to work, and quite sadly the case. Tell me, how much money have you raised over the period? Well, in fact, how long has this been going? And you mentioned you've been there a couple of years. Is that what I think you said?
Yeah, I took over as CEO in September of 2018. That's when we started doing our acquisitions. We've raised $25 million from there. Not a lot in this industry. I consider ourselves to be great stewards of cash, particularly compared to most in this industry. And we've been pretty careful about what we invest in and where we see our business going. The formulated products industry, being anything formulated with oils or extracted derivatives, is where we're focusing. Obviously, we're not focusing on the dried flower. There's enough of those out there. So we're going to look to play in the rest of that industry. The acquisition of CANN opened up several doors for us on the medical side. They have contacts and they have pretty advanced conversations that we were able to bring in with us. That will be to us a big change to what we could have previously offered. So
these guys don't run their own separate balance sheet. You're all in the same balance sheet, right? Okay.
We do, yeah.
And you're all incentivized the same way. Like, how many shares have you got? How much money have you put in yourself?
In terms of actual cash, I have no idea. I'm sitting with a little over 4 million shares, and since COVID began, everything was very uncertain, and we didn't know how big this could be or how ugly it could be. A lot of the management staff, including me, started foregoing salary and taking equity instead. I do that. I've been fortunate in life that I don't require a day-to-day salary. Instead, I would prefer to take equity in my company, particularly now, as I think we've been beaten down harder than we deserve. Although, given the sector that we're in, everyone's been beaten down. So it's it's a hard thing to say, hey, you guys have been unfair to us. Everyone can say that.
So given you were at 300 million market cap, I imagine the salaries then were probably different from they are now. Have you cut salaries and deferred salaries, or is everyone still like paying themselves a decent wage, whether it be on an equity basis or otherwise?
I would suggest that none of our salaries are outside of what I would be able to easily defend publicly. There's no big numbers here. We have to be competitive in the industry. You'll just lose people. I've got good people that I'm happy to be working with. Very rarely do you find a company that things work well like that together, and we're pretty excited about what we have. So a lot of people, I wouldn't say deferred, but chose equity instead of salary. And then during COVID, we did temporary layoffs pretty much right across the board until we could get a handle on what exactly was going to happen in this industry, or in the world in general, I should say. And then now that we're seeing our business grow and our revenues grow, and the need to bring more and more people on, everyone who was laid off has been brought back, or everyone that felt comfortable. There's still some people who aren't comfortable being in close quarters with others, even though you go into a cannabis facility and everybody's hands are covered, mouths are covered, faces are covered, heads covered. It's quite the pharma clean facilities. So, I gotta say that there's no offside salary. There's just no offside compensation in our company.
Right. Okay. And one last one. 2021. I couldn't work out. Are you breaking even next year? You told us what you're doing in 2022. Are you breaking even next year, or are you going to net profit something?
We're targeting EBITDA positive next year, and not adjusted EBITDA positive. I don't really understand the adjusted part of it. I'm pretty well financially literate, and I still don't completely get the adjusted aspect. But we're hoping that by the run rate that we're kind of clipping out right now, that looking at March, April, May, somewhere in that neighborhood, if things come into play, that our company should be able to pay its own bills and be cash flow positive from operations, and have that do nothing but build over the course of the year. So hopefully by the end of the year, any potential losses we took in the first part of it, we'll be offsetting that with positive EBITDA in the second half.
Okay, Clint, thanks very much. Nice run through. I appreciate the frankness. We'll follow the story, see how you get on.
That's the only thing I ask. I'm not telling people to go out and buy my stock. I'm telling people, watch this. Watch what we do. Watch the things that we're putting out there. I feel that we're one of the more aggressive companies when it comes to our products and what we're doing. We're pricing aggressively, and we're putting some high quality products out. And we believe those two things are going to pay off fairly strongly in the future.
Yeah, like you say, business is simple. Just bring more money in. Bring more money in than you spend, right?
Everyone should do that. What's going on?
I know. Clint, thanks very much for your time. Stay in touch. Pick up the phone. Let us know if there's anything good happening, okay?
Wonderful. Thanks, Matthew.